Hi everyone, today we're going to take a look and see if there is going to be a stock market crash in the month of May, and as the old saying goes, sell in May and go away, and we're going to see if that could come true again this year. It tends to happen, it tends to be a little bit of a sell-off somewhere in the summer period, and a lot more volatility in the market is between the months of September to April, and that's where a lot of people tend to aggressively buy because that's where they think they can make the most money. So now that we're in the month of May, we're going to take a look and see if there's potential for a stock market crash in May. Now, only about 2 weeks ago, I think it was, I made a video saying, will there be another stock market crash, or is the stock market at least going to pull back? And I said on that video, I think there's a good chance that we could see a pullback. We haven't seen the stock market pull back yet, but the more evidence for supporting the case that the stock market is due a pullback is coming more and more stronger, and we're going to cover that today. Now, as always guys, smash that like button, and before I get into the video, like I say, this is just my opinion, and the stock market is one of the most hardest thing to predict. Like, I'm just having a shot in the dark right now. Like, no one can really predict where the stock market's going to go. A month ago, would we have thought we would already be back at this sort of point? None of us thought we would get this V-shaped bottom. I said on the video not so long ago that I believe the stock market will recover slightly. I thought that it was way sold off, and I felt like if you haven't bought any stocks at these sort of prices, I would do, because the stock market might bounce and we might not test these lows again. So I would just be careful of that, and I said that on the video a few months ago, and now I'm kind of making a video saying where I'm at with the stock market and what I'm doing. And like I say, I believe that the stock market is definitely a little bit overvalued at these sort of prices and is due a pullback, and we're going to cover that evidence today. So when we look at the stock market chart overall, we're only down now 13% from our highs, only back in towards February time, and that's kind of worrying that I see how much the stock market has recovered. We're nearly at the start of this 2019 prices for like the NASDAQ, and it's crazy. Like, for us to recover this fast is definitely worrying, and we have gone up way too much in my opinion, and I would say that we should be a lot lower from here. Now, just to give you a little bit of an idea, when we look at how much we're down, it's taken 2 months to recover half of the losses that we've had so far. And put that back to like the last recession we had, because we're definitely in a recession right now. When we look at the 2008 Great Recession, it took a year to recover as much as it has done in 2 months this time round. So it shows the amount of difference, and sure, there's a lot more protection around the Fed and how they're trying to support the stock market in general, but you look at the difference there. 2 months to recover this time round, and last time it took a year to get to this sort of point. And the thing is there's so much uncertainty still out there. Normally investors don't like uncertainty and don't normally invest into uncertainty, and we definitely have a lot of that going around right now. And to do that in 2 months when last time it took a year to get this kind of rebound is crazy in my kind of opinion right now. And there's also a lot more negatives going on. When we look at job losses, the job losses are absolutely huge right now. They're going to stand out a lot over the next coming few weeks. So for the stock market to only be down 13% when we've had one of the biggest job losses we've ever had in the history is insane. We also have the potential of the US and China falling out and more tariffs being put on. That's kind of more recent news, but that's another negative that we had in the stock market, and that generally held the stock market pretty much back in 2018 for a very long time. And in fact, it went into 2019, and that kind of held a lot of gains off. We have earnings. Earnings they've been okay. They've been kind of, I would say they've been as terrible as we thought they were going to be. So there's not really any kind of bonus there. We've seen a lot of companies that are like, yeah, we're not making as much money, and they kind of seen the stock market move up after earnings, which is like, shouldn't we just kind of stay flat? Like, there's no good news there. It's not like we've gone, oh, they're actually doing fantastic. We're still at where we are at in 2019. Like, that's not happening. So the stock market shouldn't be moving up on earnings. At the same time, I do agree it probably shouldn't move down because they haven't been terrible. But really, the stock market going up, like some stocks are starting to go up to like the 52-week highs again, and it's like, but they're not doing the numbers that we're doing back in 2019. So we've seen earnings being hurt quite a bit. The amount of debt on companies, the debt on companies has changed dramatically. The amount of companies that now have a lot of debt on their balance sheets is really starting to take its toll, and a lot of stocks are not reflecting this. Like some of these companies are not in as good shape as they were in 2019, and there's a lot more potential for them debt to go on them balance sheets over the next 6 months. I look at the US is trying to open up very quickly. At the same time, I'm going to say that's really risky, because if we get a second spike, is the US going to have to lock down again? So I feel like the US is playing a bit more of a risky game to everyone else. Worldwide, we're kind of slowly opening up back again, being very cautious. So the revenues aren't going to be 2019 revenues just yet. We're going to have to wait a few months for that. And so the earnings are not great. The debt is going to have to get taken on to try and keep these companies going. So the balance sheets are getting hurt, and same again. Does the amount of damage on the balance sheet reflect an only 13% discount in the stock market? Dividends, a lot of people invest for dividends, and a lot of dividends are having to be paused. Some are going to be cut. Shell, I can't believe they've actually come out and cut the dividend the other day. That sent a lot of stocks down. It pretty much shook the whole stock market, because Shell originally were like, yeah, we'll still pay this dividend, and they had to cancel it. So dividends as well, a lot of dividend investors, they're kind of having their dividends at risk right now, and they're kind of getting pulled out from a lot of stocks. So you kind of look at the dividend side of it now, and is the loss of dividends only 13% discount? So I feel like when you put all of these negatives into the stock market, should the stock market be down 13% from here? Or overall, should the stock market be a lot lower? Now, in my opinion, the stock market should definitely be lower. I feel like the stock market should be on at least a 20% discount right now. If you consider all of these things that have happened overall, and we're not out of it yet, there's a lot of uncertainty out there of what's going to happen with the world and how much is it going to recover. Personally, I think it will take at least a year to get to a point where we're kind of recovered. That's my opinion has kind of changed with that. I thought that it would be taking about 6 months, and now think about a year. So in my opinion as well, it's changed. Like the recovery time is going to be longer now, because judging with how other governments are operating, their lockdown is taking a very long time to smooth out, and there's a lot of social distancing things being put in place, which limits the amount of activities and events that's going on in the world. Like I say, slightly different from the US, they're treating it a little bit more different, which I do think is slightly risky as well, which is then another uncertain point about how are the US going to manage all these cases. Are their cases going to spike with the lack of rules that they have? I don't want to go too political on it, but that's another thing you've got to take into account. And I feel like there's a lot of risks out there and still a lot of negative factors. And I look at the market and I'm like, 13% down. Should it be more than this? And I think it should. And personally, that's why I'm not buying stocks right now, because I've bought down where the stock market got really low down, and I'm happy in there. But when it gets up to these prices, for me, there's just so much risk to reward right now that I feel like the risk is definitely outweighing the reward. So I just don't want to touch the stocks at these sort of prices. And I will be very happy to see the stock market go down, because then I can buy stocks lower. But I look right now, and for me, the risk right now is just crazy, and I definitely won't be buying any stocks right now. And I thought I'd make that video just showing how much has changed out there, and the stock market isn't really reflecting it. So I do believe the stock market will go down in May. 100% sure that I am quite confident that we should have a pullback at some point, because these prices definitely aren't justified overall. So I thought I'd make that video for you guys, just saying, in my opinion, just be careful, because I feel like, in my opinion, we are definitely in overvalued territory right now with what's going on. And as always, I hope you enjoyed the video. I hope you enjoyed the information. If you could smash that like button, subscribe if you haven't, and I'll see you on the next video.